Hi, everyone. Today we have an awesome story for you. I have with me today Jeff Grampp here, and he is a past client who's going to share a little bit about himself, why he decided to invest in Chattanooga, what it was like, and then what wisdom he has for other people like himself, real estate investors looking to do some long distance investing. So, thank you so much, Jeff, for being here today.
Yeah, thanks so much for the opportunity, Adrian. It's great to be talking to you.
Thank you. And let's go ahead and start with your background and why you started doing real estate investing.
Yeah, sure. So I'm born and raised in Southern California, where I currently reside. Um, a lifelong finance kind of geek going back into high school days, always interested in numbers and money and maximizing the dollars earned, and eventually got into stock market investing, kind of high school time frame. Got really aggressive into that over the years, and I think as probably a lot of people who you talk to and who I talk to eventually kind of catch the real estate bug, which kind of organically happened. I bought my first single family home. It was a townhome in 2012, which was my residence. Ended up getting married, starting a family, kind of outgrew the property, but was able to save up enough to keep that as a rental, which has performed pretty successfully out here in Southern California. And as wealth began to accumulate, started figuring out, okay, well, I don't love the California market from a value perspective. I'm someone who likes the cash flow. Where else can I go? Started looking elsewhere, out of state. My initial interest was in the Dallas Fort Worth market, and I had a fair amount of travel there for work, so felt like I had a little bit of an understanding of the market. So started trying to build some relationships there. This was kind of post-COVID, but still pretty early on, call it 2020 timeframe. And it wasn't obviously the most original idea to go into Dallas and buy single family homes. Obviously, that's a very popular area, and the competition was rough. I mean, the partners I thought I thought were good, but it was just really tough to find deals that could make sense. I'm kind of a more conservative investor. I don't want to bet on 10-20% price appreciation every year till the end of time. I think that runs out at some point. So started shifting focus, looking into other markets. Tennessee had kind of been on my radar, but fell a little bit below Dallas out of the gate. I had built a relationship with a lender in Chattanooga named Zach Nelson, who I know you know, and I talked to Zach about just kind of some different markets, and he said, "Hey, have you thought about Chattanooga? It's pretty interesting, and I have this great agent named Adrian, who's done some really good work with out-of-state investors. You should talk to her." And so, you and I spoke. That was probably maybe a year and a half ago, something like that. And I mean, I was already interested in the market, just from a kind of demographics perspective. It fits the whole narrative of people moving out of the big cities into these areas that provide a better work-life balance. They still have good amenities. It's a slower pace of life. You get a little bit more land. Your dollar goes a little further, and so everything about that checked the box. And then it kind of, I think the light bulb clicked in my head after talking to you that if you can have a good agent who really can service you, especially as an out-of-state investor, who we need a little bit more hand holding and a little bit more service than someone in the region, like that can be a home run. And so that to me was really the kickoff to the journey to getting into Chattanooga a little bit more aggressively, which we've successfully done over the last couple of years now.
And would you say that the decision of Dallas Fort Worth versus Chattanooga was more driven by numbers or by the team or by fundamentals of the market, or what was some of those major factors would make that switch?
I'd say it's a little both. I mean, I think early on, I had some hope that the strategy of, look, I'm kind of a passive guy. I have a day job. I can't go out and try to find the off-market deal. I just don't want to invest that time. And so I want to be on MLS. I want to find things that are a little bit lower risk. And that strategy in Dallas was just really tough, I think, to begin with. And so that creates a little bit of an uphill battle. But then you compound that with, a team that just wasn't, I think, servicing me the way I thought would be conducive to getting things done. And I think if I can do the compare contrast here, I think the first deal that we worked on, it was you or Tevin proactively, Tevin on your team saying, hey, Jeff, here's something that based on our conversation with you, this is right up your alley. It just got listed, it's priced right, in a good neighborhood, et cetera. What do you think? And I said that, having done my due diligence and being able to react quickly, say, hey, that's a good opportunity. Let's go look at it. Let's talk about it. And we had a strategy in place within 12 hours. I think we were putting an offer down on that first property. Compare that with, my experience in Dallas, it was a lot of, me proactively generating the leads, and then kind of just talking at a wall. Well, what do you think? Well, what do I, I want someone with an opinion. And, if we have a difference of opinion, if anything, that's better because it allows for some, back and forth, and you can ultimately have the best decision, which is what we all want. But when you're not getting that constructive advice, I'm out here in California, pretty ignorant to a lot of the in the weeds things. And so if I would love that feedback to say, hey, this is something you should lean into. This is something where, hey, maybe it's a bit aggressive and we should take a step back. Like, that's great feedback that I just wasn't really getting in my experience elsewhere. And it gives me more conviction to, build that relationship and trust the team that I'm with, knowing that they have that expertise and those opinions. Like, the opinions are great.
For us, and I think we described is our ideal setup. We do actively look for clients
and do that exact thing. Like, we have the MLS search, we have these other things that are a resource for clients, but the biggest thing is every morning looking at our deals that are coming from on the MLS, off market, wherever, and saying, okay, who on our list would this be a good fit for? And sending them out actively and being like, hey, this is why this is a good fit for you. What do you think? So yeah, we try to do that. I'm glad that made a difference for you.
Yeah, and I think the other thing I'd build on that too was, you guys having that investor hat on as well, and not just the real estate agent hat of, hey, here's how a transaction works, or here's kind of a good way to redo this floor plan or something to that effect. But hey, here's how the numbers could work out. This property is listed at X. I think if you invested this amount of budget to redo this, you could rent it for 10% more than what comps could be in this market for reasons X, Y, and Z. And that advice is just so instrumental to someone who's looking at it from an investor perspective and who's also out of state, is getting those next level insights to kind of build out the model, right? Like, that's especially me being extra finance nerd guy, is I want to see the numbers pencil out, and getting that input from the rental side was also hugely valuable when working with you guys.
Well, thank you, because we see so many rehab estimates, we see so many rent numbers from our clients, because we deal with so many of these situations, that it allows us to be able to be like, okay, here's the standard, or here's our ballpark based on what we see, since we see it a lot. So again, glad that made a difference for you. So once you bought the place, how has it gone? What was, you bought a long-term rental. Tell us a little bit about what your investment looks like. Your investments look like here in Chattanooga.
Yeah, so the first one closed, I guess we're going in a little bit to a year now, going up on 12 months. It rented for exactly what, you and me were kind of estimating. The tenant's been fine. I don't know that I've spent a dime on anything. It's just been, everything's come in exactly. I guess I'll caveat, there were a couple dollars spent to just, clean the place up on the front end, but nothing major. It was a relatively turnkey property in the beginning. So that's closed. It rented out pretty quickly in, not the greatest time of year. It was kind of towards the end of calendar 21, but still had pretty good demand to get it rented. And then we closed on the second one with you guys in January or February of this past year. That was rented before it was even listed with the property manager that you recommended to us. He just had some inbound inflow from people looking to rent, and so that one didn't even need to get listed with any service. It was rented out extremely quickly, which I think is another interesting story on that property, and that there was some issues with the house discovered during inspection, and being able to work with you guys creatively to think, okay, this is still a good property, but how do we restructure things? How do we negotiate the price? Because it was I think $5,000 plus type of repair bill that no party was expecting. And so being able to leverage and realize, hey, this is bad for everybody if things kind of fall apart here. So being able to have kind of that level-headed ability to talk about things on the fly and deal with these issues that come up to still close the deal and get something that, you know, same type of experience with that property, rented quick, no ongoing issues. Renters have been great, got it in a good market, bought it right. So it's all been great.
Awesome. And I think you hit on something there that there's always going to be some bump in the road with something, right? And in hindsight, we can be like, oh, well, it was all fine. And we're good in the end. At the time, it can be a little bumpy. And so that's where, especially for, you know, the buyer, the client, to have somebody who's like, we do this all day, every day. And we occasionally get new problems, but we have enough experience with the challenges in general that we can figure it out. But yeah, it's part of the adventure.
Yeah, absolutely. But thus far, everything else has been great. I'm sure other stuff will come up down the road, but knock on wood, so far so good.
I'm glad to hear that. And what wisdom would you have for someone else like yourself, a long distance investor looking to do a similar strategy, you know, get some long-term rentals here?
Yeah, I think it's know what you want going into it. I think there's kind of this allure of, I want to have my real estate, you know, real estate goes up, it gives cash flow, it's passive income, it's an inflation hedge, all these things that we like about real estate. But being more specific than that to know what you want. Like, I don't want to put a ton of money into a property up front. I don't want to buy something that needs another tens of thousands of dollars to refresh it. I think there's a ton of value there for the right people who want to invest the time and build their team, et cetera. So I don't want to demean that strategy. I think that strategy is great, but that's not me. I want to buy something that you know, is relatively close to being ready. And I'm a long-term buy and hold. So I don't assume that I'm going to flip this in 3 to 5 years for 50% more or anything like that. So, and if that's your strategy, then let it be your strategy too, but know what you're getting into the market. And I'm sure you can probably attest to this with the number of people you've worked with, having people who don't have a clear kind of strategy or mindset for what to look for. It just, I imagine, makes your job harder. And I know even, you know, just learning myself on how to communicate, you know, why dealing with me is worth their time. I think I know what I want. And so I can tell you really quickly if it makes sense or not, and, you know, be respectful of your time. You know, you guys need to make a return on your investments and your clients. And so having that mindset that, you know, you and the other agents out there need to make a return on your investments, dealing with us out of state people who require some extra hand holding. And so just having that kind of mindset and respect for the profession that, you know, will be reciprocated. I imagine people who are harder to deal with probably don't get the quickest return calls. And so just being an easy person to work with, who knows what they want to do, I think you get the benefit of the doubt and, you know, a little bit extra attention when things come their way.
I think that's great wisdom. I mean, definitely knowing what you want. That's the biggest challenge we have with clients, is when they don't know exactly what they want. Or what we see is clients get less return when they aren't sure what they want or they change strategies because they weren't gunning for one specific plan. So that's a good point. And then yes, you know, being easy to work with definitely helps everyone involved and helps the process be smoother and more effective. So behind both of those points, they would make my job if every client listened to your wisdom.
Yeah, well, I certainly not perfect. I mean, I would say too, just on the strategy, you know, with what I experienced like in Dallas, is my strategy did not work, clearly. But and I could easily make the argument, playing hindsight, like you mentioned earlier, that could I have made some money if I stretched my budget 5%, you know, early on and closed on something? I mean, I think empirically it's hard to argue that that wasn't the case, but I feel very comfortable knowing that I didn't change my strategy to just fit what would work in a given market, because that's not why I would have bought the property. I wasn't buying a property to go cash flow negative and play appreciation, which is what would have been the case and would have played out in the short term. But, you know, I wanted some appreciation potential, which has happened in Chattanooga. And I've gotten the cash flow too. So I've gotten, you know, to kind of dip my toe into both means of generating a return here, which is what I wanted. So I'm happy with sticking to what my strategy was.
And you hit on something perfect here, which is I always
say to people, Chattanooga is a hybrid market. We have cash flow, we have appreciation. So it's a good market for that. Like you should never be cash flow negative in the Chattanooga market. You're not going to be the highest on both. There's other markets where you're going to have more cash flow. There's other markets where you're going to have both higher appreciation, but I feel like it's a nice hybrid market because you'll get both. So I appreciate you pointing that out as well.
Yeah, well, lied in the right market.
And you have a blog where you shared about this experience and other things with your real estate investing and finance.
Yeah, thanks for the plug. So it's haveagrampday.com, like my last name, and just started it about 6 months ago or so. So it's pretty wide ranging. I'm kind of finding my footing, as it were, in terms of the strategy. But writing about my financial journeys. I mean, I'm very passionate about financial education and financial literacy. So anything I can do to help people kind of understand the investment world. I think us finance people tend to overcomplicate things as a way to make ourselves feel validated or smarter than we are with overly complicated terms. So just trying to distill the world down and share my experience on some things too, to just kind of give some perspective. I think there's some visions of the world through social media and blogs that everything's great and everyone's a millionaire, and everyone makes mistakes sometimes. People lose money. Sometimes we win, sometimes we lose. Chattanooga's been great, so that's a mark in the winner's bucket. But yeah, that's kind of my journey, and looking forward to writing more articles going forward on that.
Awesome. Well, if you guys are interested, his blog link is going to be in the description below, so please go check it out. It's something there, and hopefully everybody can learn some stuff there and be more educated investors and have that greater financial literacy to really help build their family as well.
Yeah, that's the plan.
Well, thanks again, Jeff. I appreciate it. And if anybody is interested in learning more or investing in Chattanooga themselves, please reach out. All of my contact information is below as well.
Great. Thanks so much, Adrian. I appreciate you having me.
Thank you. You have a great day.
You too. Bye.